This is Pat Walker at MissionWinners.com. I'm making a training video for everybody. What are we calling it? How to not get killed in the market. How about that? Let's cut to the chase. How to not get killed in the market? Because some people did. Let me tell you. And I know it. It's a fact. I've sat there. I know what it's like. Something a lot of people do is they look at the charts, but they don't tear them apart every freaking day. Charts talk, and we got to listen to them. I want to show you something. This is spiders going up here. We're going to do this day to day. This is what I do at the IBD meetup, at the Investors, St. Louis Investors meetup. We go through the charts day by day. Open, high, low, close. Look at this day right here. Is this a good day? Yeah, it gaps up and closes near its high on a pickup in volume. Folks, open, high, low, close. Advance of the day. Oh, down. Okay, gap down and close near its lows on a pickup in volume. But is that the end of the world? No. What's the trend? The trend is up. Don't freak out, but watch it. Why? Look at the volume here. This volume is heavier than the up day. Something to watch. Oh, it drops. Now it does it on lower volume. It falls down a little bit below the 8-day. What's one of our simple trend following rules? Be careful when things lose the 8-day. Be careful when things lose the 20-day. It's not hard. It's still intact. The trend is up. But this was not a good day. Advance of the day. Oh, gaps up and closes in the bottom half of its range. But it did it on low volume, near the 20-day. Advance of the day. Oh, look at this. It gaps up. You see the open right there? It runs up and closes in the bottom fourth of its range for the day on a pickup in volume. It's talking, saying, This day, it gaps up and runs up, closes in the bottom half of its range, above the 20-day. We're hugging the 20. Gaps down, closes up a little bit on a slight pickup in volume. Oh, that's not a bad bar. Let's watch it and see what happens. Oh, look at this. It gaps up, it runs up, closes in the bottom half of its range on okay volume. But folks, it was met with a little bit of selling. You can say, Pat, how can you say that? Because it gapped up, it ran up and closed below the open. There was more selling than buying on that bar near the close. That's all. Is it a panic? No. Is it, geez, sell everything? Why? It's above the moving averages. But we just look at price and volume every day. Advance of the day. Just an inside day on low volume. It's a nothing day. It's above the moving averages. It's a nothing day. Sit tight. Oh, look at this. It gaps up, runs up, and closes in the bottom fourth of its range of the day. Folks, look at this bar. Is this a good bar or a bad bar? And it did it on heavier volume. It was met with selling pressure. That's looking at the chart every day, folks. Oh, look at this. Gaps down, drops down below the 8-day, below the 20-day, finds support on the 50-day. But look at the volume. Hey, folks, that ain't mom and dad selling. That ain't your Uncle Joe selling. That's serious. That's selling. Those are triggers. All these are triggers to say, hey, watch me. It's a little red flag flying. You better watch me. Be careful. There you go. Gaps up, runs up, closes down right at the 50-day on heavy volume. Folks, look at these two red bars versus all of these. It's talking. Do you freak out and sell everything? No, but you're selling some into that strength and you're selling some losing the moving averages. Keeps losing the 50-day? You got to be careful. Oh, look at this. It gaps down, falls, closes near the top half of, or top fourth of its range, but on less volume than it fell on. Is this a really strong bar? No. Is it a bar to buy on? No. Why? Because the volume on this bar is less than these. Advance of the day. Gaps down, runs up, closes in the bottom half of its range again, but on less volume. Do you freak out? No. You've sold some losing the moving averages. You better be selling here and here, okay? You're losing moving averages on volume. Boom. Adios. Look at this. And it was giving you warning signs. When it gapped down and starts to drop, if you're in there and you're losing the 50-day, adi frickin' os. Goodbye. You're done. That's it. It's simple. Don't forecast. Let the market tell you what to do. Ouch. That's going to leave a mark. Does this. Look at this. Look at this bar here. Look at the down. Look at the close. Oh, it's going to go up. Don't argue with it. Does this. We got out. You miss all this crud. And it meanders around and it starts to build back up. Now, take it a step further. Again, bar by bar. It fell on volume here and it's going back up. Look at these bars. Here, I'll draw a line, right? So I'm like a kid with a new toy. Here we go. Look at the red bars. See the red volume bars? Those are down bars. Are they bigger than these bars? It's not a trick question. No, sir. Look at that. It is. More selling than buying. Does this. Look at this bar. Runs up, close down on a slight pickup in volume. Starts to march up. Gaps above the 200 day. Oh, that's great. Look at the volume on there. Oh, it's a pickup in volume. How is it relative to these bars? Not so great. Look at where it stops. Look at this. Right up near these highs here. See that? Nothing. Starts to drop again on a pickup in volume. Oh, starts to pick up again. Less volume, but it's losing its moving averages. Think about this, folks. There were people that bought this dip and it ran up to here. You think there were some people that bought it here and it ran up to here and sold? Yeah, I know there are. I know that. I'll bet my life on it. How come I know that? Because shoot, it fell in price again. There were sellers. Drops all the way down. You think there were people that bought this dip and watched this thing go up to here and then drop all the way to here and they didn't sell? Of course there are. And then do you think there were people that bought this dip, watched it go up to here, didn't sell, watched it fall all the way to here and run right back up to near their price? What do you think those people did? This is what they said. Thank God I'm near my price, I can get out. It's a fact. Charts are nothing but a reflection of emotion. There you go. Down here. Down here. Look at it. Pick up in volume. See this? They say, oh, this is a good bar. Gaps up and closing near its high. Yeah, that's good. That's good. Maybe it's a start of something, a high or low. Goes up. Oh, falls again. But it does it on less volume. Okay, that's all right. By the way, we're not day trading this crud, okay? No. We're bigger picture people, all right? Down on a pickup and look at gaps down here. Falls, but on low volume. Goes up on a slight pickup in volume. So, oh, maybe it's going to bounce here. You could say, maybe I'll buy some if it cuts above the moving average. Goes up, low volume. Oh, look at this. Person gaps up and around. A person could buy some right here if they wanted to. Why? You've got a higher low. Advance it. Flaps around at the 200. Pushes right up to the 200 on a pickup in volume. But is it heavy volume? No. Coming to the falling 50-day. Oh, look at this. It gaps up and closes in the top half of its range. How's the volume here? It's a pickup. How's the volume right here versus this? Not so good. Hey, this leaves a mark. Look at that. Do you think we're the only people in the world that looked at this? No, back it up. Look at these tops here, here, here. You think there were people that bought this here, watched this son of a drop all the way to here and go back up and they said, thank God I'm near my price, I'm selling. And they did. And then you get this. You get all this. These wide and loose bars. What's that indicative of? High investor emotions. And folks, high emotions and good investing don't mix. They don't. I'm just telling you that. You can say, well, how do you know that? I've been doing it since 1986. I saw the crash of 87. This gets above people's pay grade. You lay low. You get all this kind of stuff going on here. Look at this. Gaps up, closes in the bottom half of its range. Gaps up, runs up, closes at its lows for the day, but does it on low volume. Drops. Drops down again. And that's the close on Friday, on a slight pickup in volume. The moral of the story is this. Every day, I encourage you, and this is for everybody, note the open, note the high, note the low, note the close, and note the volume. Just do it every day. The charts will talk to you. They'll talk to you. And they'll keep you out of trouble. You can say, this is a good bar. What do you want to see? You want to see follow through. The next day, it gaps down, runs up, and closes near its lows on a pickup in volume. Well, less volume, excuse me. But this is sloppy ass action. Be careful. Another simple rule. How is it relative to the moving averages? When you start getting below the 200, below the fallen 50-day and the 200-day, you have to be careful. This is not strength. This is strength. This is not strength. It just makes it easy. Don't force stuff. Wait. And I will also say this. More money is made in longer picture trends, okay, than all the wiggle crap in between here, okay? And by the way, do I look at 5-minute charts? No, I don't. Let me show you something here. Right here, team. Here you go. Come on. Look at it. Look at that nice base. It was a leading group, by the way. Great number. It just goes up. It just walks up the moving average. Do they all do this? No. Anybody who says that's a liar. But some of them do. And you try to let them work. Leading groups and leading stocks. That's what you're looking for. The moral of the story is this. Focus every day on the open, the high, the low, the close, and the volume. And do it in relation to the previous day and the previous days. And all of a sudden, things will start to gel for you. And you'll say, that's really not a great bar. Oh, that was a good bar. Oh, it looks like a good bar, but there was no volume. There was no conviction. I know this was, it's almost a 12-minute video. Boy, I sound old, don't I? But I just want to try to explain these things really nuts and bolts it. This isn't some hocus pocus theory. This is the real world. This is looking at the charts and tearing them apart. And that's what you have to do. That will set you apart and ahead of the competition. So thank you very much. I hope you're all doing great. Rock and roll. Let's have some fun. And be safe. Be safe. All this will pass. We'll get good trends again. It happens. Thank you.